Hi guys, good evening. Uh, Today has been very good. Okay, today has been good. I've been pushing. Um, uh, okay, today I'm gonna be showing us how we can, for us that want to understand the trading setup I use, and also how to trade the market. Okay, how to trade the market and to understand at least the basics of trading. Okay, I try to simplify it so that we can be able to understand. Okay, I put in one or two together, so I think doing this we can be able to understand my kind of strategy and how I look at the market. Okay, so I'm going to start with this one. Okay, now we're starting this way. Now, this first picture you have here, okay, is just to identify buying and selling, okay. You can see the arrow here is facing down, which telling us that the market is going to sell, okay. You can see two red bearish candle and a sell, which I put up there, shows sell, okay. The market is coming down, right? And you can see at the end here, you can see a buy. All right, you can see I put in a buy. So when you see green bar, when you see candlesticks going up, shows that the market is on a rise. Okay, that's a buy. Okay, now you can see at this junction, this end here, where I would sell up here. Okay, you can see the market is also coming down with this red bearish candle. Okay, down to the downside. So now you understand that if you are putting for a sell, the market is going to be coming down. While if you are putting for a buy, the market will be going up. And also here too, market is coming down, right? Now we're going to the next picture, which is this one. Now, this is a Meta 5 um, platform. Okay, it's a trading platform which all brokers use. All right, we have the Meta 4 and the Meta 5, but I prefer use the Meta 5 because it has all the instruments we need. Now, um, when you start trading, you would have this for sure on your computer because you need this to enter a trade. Okay, even on your phone, it's also a Meta 5 and Meta 4 app as well. But I put this picture here just for us to see that this is how it's going to look like. Okay, all right, and this is how it's going to be. Now inside, you can see we have like a bar there. Okay, we have a sell and a buy there. So now, when you see a sell, okay, on this platform, okay, you click on sell and it goes down, and click on buy and it goes up, just as we have here. Okay, so the basics, you see selling is going down, buying is going up. Okay, so that's what happens here too. You click on this button to execute a sell position, and you click on buy here to execute a buy position. All right, now if you look inside, you will see you have a 0.01 there. You wonder what does that do, or what does that mean? Okay, now to make it easy and simple, okay, 0.01 is the money you will use to place an order for any trade. Okay, instead of like $2 or $3 or $20 or $10, you're saying 0.01. That's like a lot size which you will use to enter any trade at all. Okay, but 0.01 is the least minimum you can go to. It's even safe. All right, it's just so you understand. So I want us to just get a picture of it. Okay, I'm not going to really push down into it or try to break it down and try to make you understand what a lot size is and this and standard lot size. No, I'm not going to do that. Okay, I'm just making you understand that you have minimum lot size to any order you be entering. Okay, and if you see, I wrote it down here. Okay, lot size is okay, like slash. Okay, money you put per trade. Okay, best would be using 0.05 in a $100 account if you're going to be starting with a $100 account on your OctaFX broker account. Okay, because I use them and they are top notch, fantastic. Okay, so use 0.05 in a 100 accounts in a single trade. Okay, nothing more, because if you are using 0.05 on five different orders on a 100 $100 account, there is high chance that it can be blown in just some moves. So it's better I use 0.05 in an account, okay, of $100 just in a single trade, or maybe you can split it in threes. You can see what I did there. You can split it like 0.02 one order, 0.02 another order, 0.01 in another order. So you have it 5 or 0.05 altogether. So that would be also a nice one. And in fact, you shouldn't worry too much, okay? If I'm going to be giving signals, okay, I think from now I would be suggesting asking, okay, if you have so account, how much you have in your account. You tell me, I can tell you how much lot size you'll be using to be on a risk safe side, okay? So now you get a picture of this. You know, 0.01 lots is the minimum lot size you can use in any trade. Okay, so on $100 account, you need 0.05 on a single trade to be at the safer side instead of putting it in different orders of $100 account. So this is clear. Okay, this is an MT4, MT5 platform which you will need to execute any trade. Why the sell and the buy is to be clicked to execute whatever entry that you have. Okay, so let's move to the next picture that we have down here. Now, this is basically the way this is now beginning. I'm now going to start explaining my strategy. Okay, now, very important thing. It's very important. Okay, that I my trading strategy starts. Okay, it starts when it starts with knowing what the market is doing, if it's an uptrend or a downtrend. Before I start doing anything on the trading view, it's a chart, a trading platform where you can, make two setups and all those things. Okay, on my videos is there. I trading view where I used to set up and explain and all. You need this to start. In fact, all strategies, you need to at least understand where the market is going to or what it's doing. Okay, so now let me push forward. Now, if you see, we have a higher low, higher high. Okay, let's say HL, HH, HL, HH. Now, a higher HL is a higher low, while HH is a higher high. HL, higher low, HH, higher high. Now, it's like a stairs, like going up. Okay, so anytime you see higher low, higher high, higher low, higher high, it's an uptrend. The market is going up. All right. So let's understand that when you see higher highs and higher low to the upside, the market is in an uptrend. Okay. Now, if you look at the other side, you can see a downtrend. Now you can see we have LH, LL, LH, LL, LH, LL. Now the LH stands for lower high, the LL stands for lower low. So we have lower high, lower low, lower high, lower low, lower high, lower low. Anytime you have a lower low, lower high, lower low situation, okay, the market is in a downtrend. The market is falling, like in a selling ranging pattern to the downside. Why higher high, higher low? It's the upside in the buying. Okay, you understand? Now let me go back to the first picture so you can understand. Now you can see here too. You can see that it's like climbing, right? Right. So let's just continue. Right now we understand this one. You understand uptrend and a downtrend. Anytime you see this, you understand. Okay. Now let's go to the next one. Um, Now we are now moving to an uptrend. Now this is trading view. Okay. Now I want to see the candlesticks to understand when you're having an uptrend. Okay. Now you can see, as I said before, in this picture, right? When you have a higher high, higher low, higher high, higher low, higher high, the market is in an uptrend. Now look at this. You have the same thing there. You have a higher low here, higher high, higher low, higher high, right? That's an uptrend. Okay. Now, let's go to the next one. Now, as I said before, when you have a lower high, lower low, lower high, lower low, that's a downtrend. Now look at it here. We have a lower high here where you have the sell. We have a lower low where you have the buy. We have a lower high where you have the sell. We have a lower low where you have the buy. Okay, that's how it is. So this market, this range here shows that the market is in a downtrend. Okay, now we are moving to the next level of my strategy. Okay, how I work. Okay, so now it's the BOS. The BOS, break of structure. That's what it means. Okay, now here we have a short definition here. It says a trading concept used by price action traders to confirm that an asset trend will continue to move in its current direction. Okay, now this is plenty grammar, plenty wala. Now to make it easy, okay, what it means here is, let's go up. Let me show you something quick. Okay, in fact, let's use this first. You can see that we had a higher high here, right? You know, I told you when you're having an uptrend, when you have a higher high, higher low, higher high, the market is going up. Okay, and you can see the this candlestick is going up. This shows it's an uptrend. The market is in a higher high, higher low, higher high situation. So it's an uptrend. Now you can see what BOS means. Okay, it's simple. It means after the previous higher high, okay, the next candle, if it breaks past the last higher high, that's the break of structure. So after this higher high, right, it came down to form a higher low here, right? The next higher high, right? The next one, in this candle that came up here, right, is the break of structure. Why? Because it broke the last higher high. Okay, now let me take it up so we can quickly just take an example from. Okay, we can use this one. Now look at this. This is an uptrend, right? Now let's use this one. Uptrend. Okay, it's going up because we're having higher high, higher low, higher high, higher low. Now look at it. Now this is this cell up here, right? This one here, okay, is a higher high, right? Higher high. While the down here, the down one here is a higher low. Now the break of structure, okay, happens when the candlesticks go higher than the previous higher high, which is this cell here. Okay, so when this candle goes up and surpasses this one, goes higher than the previous higher high, that's the break of structure. So you understand? All right, the break of structure happens when it goes higher than the previous higher high. Okay, I hope we understand that one. Okay, so let's move on. Okay, so now we understand that the break of structure is when candlesticks breaks the previous higher high. It forms a break of structure and creates a newer higher high. Right? So now let's go down. Now BOS to the upside. Now we have bullish BOS, which is the buy, which is this one that I just explained to you now. Now this is bullish BOS and a bearish BOS. You can see this was the last higher high, right? It came down to create a higher low, right? It's a higher high, higher low. You can see the candle came up and surpassed this previous higher high and created a new higher high. Okay, I think this was even more explanatory. Okay, it's easy. This is more understanding. It created higher high, came down, created higher low, went up higher from the previous higher high and created a new higher high. That's a break of structure. Okay, so on the bearish side, you can see what happened. You had a lower high, right? It came down, broke the previous lower low. Now you have a new lower low. Okay, so break of structure happens when it surpasses the previous higher low or lower low to create a newer higher high or a newer lower low. So that's just the concept. Difference between a bullish BOS structure and a BOS break of structure and a bearish one. Okay, so it's explained. Now we are going to now this is another way to make it make us understand. You can see we had the market go up, right? Came down. You can see the dash line that I draw here, right? You can see the market cross that line to create the BOS break of structure. Okay, you can say it surpassed the previous higher high, which was the sell here. Okay, it surpassed it and created a break of structure. So this is also explained. Now this is for the bearish side. Okay, you can see a lower high here, a lower low, a lower high. It broke the previous lower high, which is the buy here. Okay, to create a newer lower low. That's break of structure to the downside because the market is going on a downtrend. Now this as well goes for the break of structure for the upside. You can see it's an uptrend. You can see I draw an arrow on the arrow. You can see I wrote the uptrend. You can see we had higher low, higher high, higher low, higher high. You can see the market went up high, crossed the dash line, right, to create a new higher high that gives us break of structure after it surpassed the previous higher high to create a newer higher high, right? Okay, now we're moving to the next one. Now this is the second stage of my strategy, okay, that I use, the change of character, choke. Okay, now that's a definition that they put here. It says it's a change in the current market structure, suggesting that the current trend is likely to reverse or lose a momentum. Plenty grammar, yeah. Now I'm going to explain it in a way that we can understand it and just move on. Now let's go down. Now, okay, now you have a bullish choke and a bearish choke. All right, now you can see the break of structure, right? Okay, now I'm going to take you down to where you're going to understand it better, right? Now this is a break of structure and a change of character, which I have already outlined here for us. Okay, now look at this, look at it. You can see I have two dash lines from the top and the bottom. And if you remember, if you check some of my videos on YouTube, I explained there, you can see I have a horizontal line up and a horizontal line down. These dash lines also is what I mean on those my YouTube videos. The horizontal line up and down are these dash lines that you see here. Okay, those lines are the lines that we hold at random. They are really important for us to identify a break of structure and a change of character. Now we understand a break of structure. All right, now a change of character, right, is when, now let me bring it closer so you can see. Now a change of character is when the market, you can see this arrow which is on red. Okay, there's no candlesticks there, so I just use the arrow to replace candlesticks. Okay, that's why I put it on red color so you understand. I named it candlesticks. Okay, so now you see that the downward movement, okay, indicates that the market has come down, right? It has come down to cross the higher low in an uptrend market because we're having a higher high and higher low. Okay, I'm going to say that again so that we can understand. The candlestick, okay, came up, gave us a break of structure. All right, now it's coming down, okay, to break the last higher low after it has formed a break of structure. So what it means here is a change of character only happens, okay, when you've seen a break of structure. A change of character cannot happen if you've not seen a break of structure. A break of structure must happen first before a change of character happens. Okay, it's important that you know this. So now after you've seen a BOS, right, you should be expecting a change of character. That change of character happens when the market comes back into that zone, these two dash lines, into the zone and crosses the previous higher low of an uptrend market. And you can see that's what happened. All right, anytime the candle creates a break of structure and comes inside these two dash lines, okay, and breaks the last higher low, which you see I put here buy, right? That's a change of character. So that's just it. It's just that simple. That's what it means. After a break of structure, you need to see a change of character. A change of character happens only when the BOS, a break of structure, has happened. If a break of structure has not happened, you cannot see a change of character. Alright? The BOS need to happen before you see a choke. Alright? So that's it for the uptrend. So now let's go down and see if we have, yes, now, no, let's skip this one. Okay, first, let's go and check the downtrend part, the downtrend aspect of the choke. Now, this is it here. Now, we have lower high, lower low, lower high, lower low. This is a downtrend market, right? Now, as I said before, change of character only happens when the break of structure happens first. Break of structure needs to happen first before a change of character. Okay, so now we have a break of structure after it came down after this lower high, right? Surpassed the last lower low to create a new lower low. All right, it crossed down. I'm talking of the break of structure now. It came down to cross the last lower low, right? The last lower low to create a new lower low, right? So now we need to see a change of character. Okay, so now we've seen a break of structure. Now the market is returning to the upside. All right, now you see we didn't have any candle at that area to show us the change of character. So you can see I put in a green arrow there, a bold green arrow, and I wrote on it candlestick. We'll use this to replace the candle which was supposed to give us the change of character. So now back to it. The arrow which refers or which we use as the candlestick has broken the last lower high. You can see it sell the last lower high. Okay, so anytime you have a break of structure, comes back to those horizontal lines, the dash lines up and down, it passes the last lower high. That's a change of character. Okay, so anytime you see a break of structure which is visible, which is clear, the next one should be a change of character, which we had because we saw this candle cross our last lower high. That's a change of character. Okay, so I want us to understand on a downward trend. Okay, when you see a break of structure, right, before you get a change of character, you need the market to go back up and cross the last lower high, okay, to create a change of character. Without the BOS formed, you cannot get a change of character. So BOS must be formed before you can get a change of character, whether it's an uptrend or whether it's a downtrend. Okay, I hope we are clear on that one. So now we now understand break of structure and change of character. Now let's go to the third aspect of my trading, my technique I use in trading. Okay, this is the most, I won't say the most important, but we just have to know this part. Okay, the most important part now in my strategy is the formation of candlesticks. I said it last time. That's having all my videos. I say there the formation of candlesticks, the 4 hours candlesticks, the 1 hour candlesticks to give us an entry, whether a rejection or a continuation. That's in fact the most important, because without that we cannot take any order. Okay, so now this is also a very important part. Okay, this one is for this is an uptrend. Okay, now as I said before you can get a change of character, you need a break of structure first, and you can see it created a break of structure, and you see the red candle, it broke down and gave us a change of character. Now to get an entry, okay, we need the market to go back up into that dash zones, the horizontal lines up and down, which is a dash line that you see. You need the candlesticks to go back up into that level where you see I wrote entry level. Okay, that entry level is where we'll be needing our formation of candlesticks, where we have 4 hours and a 1 hour confirmation, okay, for the downside. So the formation of candlesticks, I explained it a lot of times on the YouTube channel, even on voice notes in my group. I explained it there, so we can also use that and fit in here too. You can also ask me questions if there's anything you need to know. I'm here to guide you on that part. So the formation of candlesticks would work inside this entry level. That's where we'll be needing it, because without that we cannot take an entry to the downside. And you can see it take TP, and the TP is the green side while the stop loss is the upside. You can see we have a very nice risk to reward there. So you can see the market had to come back after the candlestick broke and gave us a change of character. It had to go back into that zone again. That's another thing, vital thing we need before we can be thinking of any entry or any formation of candle. We need sorry, we need the market to go back into that entry, give us a formation of candlesticks, 4 hour candlesticks, and 1 hour to give us whether rejection and continuation to the downside. Okay, all right. Um, I think that's it. That this is for the uptrend. Why in the downtrend? I didn't put it here, but it's the same scenario. Okay, this time for the uptrend, you can see the choke was created down and had to go back into that zone. After the formation of candlesticks, we are going to the downside. But in a downtrend, okay, we are looking to buy the market. Okay, in that case, you need the after the choke has been created up, it needs to come down back into that two horizontal lines and give us an entry level after we've checked formation of candlesticks. Then we go up. Okay, so now I say it again: a downtrend, an uptrend market, as you see it here, this one, an uptrend market. Anytime you see an uptrend market, after it has given you requirements, BOS, and a change of character, and a retest into the horizontal line up and down, we need to be selling the market. If you see an uptrend giving us all these requirements are being marked out, then we have to sell the market. Except during our formation, okay, there is a change of plan, we are seeing a rejection, then we will only buy. Okay, but if it's a continuation, we are going to sell the market. So anytime you're seeing an uptrend and it gives us accurate continuation pattern, we are selling it. And that also goes to a downtrend too. Okay, if you are seeing everything, the requirements, the BOS and choke is giving us what we want, it goes up and comes back to retest that zone. We have an entry and a bullish candle now, because that's a downtrend. Okay, we need a bullish candle to go up. So you're having a downtrend, you're looking to buy the market. You're having an uptrend, you're looking to sell the market. So that's just it. Okay, so I think that's all for that's all we need to know. I think this should be a stepping stone for us. Okay, I think with this we can move forward. I believe so. But if you still need any, there's any question, I'm available on chat. Talk to me. Um, this is going on YouTube, of course. So it's all good. All right. So peace out, guys. Enjoy.